Hey, everybody. We're having our weekly Precision Markets office hours hosted by your Precision Markets coach, Brian. And in this, we dedicate this time to be able to answer any questions that you may have, and specifically regarding anything chart related, strategy, etc., anything that's needed for you to be able to understand some things that you don't get a chance to get answers for within the community. And so for everybody's first time joining this call, the way it works is that in the chat, we'll go ahead and allow you to ask questions. We'll answer questions in the order that they're received. And we ask you just be respectful when it's somebody else's time to answer a question. When it's your time for your question, feel free to come off mute. We'll be glad to answer any questions. Also auditorially as well. You don't have to also type in your questions. So with that, we'll go ahead and begin, and go ahead and don't be shy and fill up the chat with questions, and I'll answer them in the order they were received. If y'all wanted to also show charts, I've enabled screen sharing so that you can show your charts, and we can be able to discuss if you want to go over entries that you may have had, or if you want to look at certain trade opportunities, or you want to look at the certain pairs in market. Feel free to ask away and be glad to share.
What's up?
Hey man, how's it going?
Man, going well.
It seemed like everybody today was on fire. The market didn't have market's probably sitting there a little bit poor from everybody raping it today.
Like the market's been a little bit confusing because of the range we were stuck in. I was just looking at liquidity pools and going with the flow.
Yeah, no, we've been stuck in a real nasty range, and it's interesting. It'll be interesting to see what happens after tomorrow. Generally, before when we get a range, there's always a big move, and especially with the news that we're going to get tomorrow, that makes sense why everything was in a range,
Yeah, I was thinking if we get some sort of scenario like Nathan described in the Discord chat.
I missed that. Tag me in that. I missed where he mentioned that, but it's going to be interesting. We have an interesting week with, if GDP comes out and it's negative, technically we could be in a recession for the United States on Thursday. And then you have the interest rate rise, which the interest rate rising isn't anything, unexpected, but we'll see. Oh, Luca, you have a question. Go ahead and come off mute and feel free to ask.
All right. Basically the question I have is about, so basically like me, I just really try to keep it simple as much as possible, coming from the mindset of like, I can't really predict. I can just like, trade my confluences. It has to make sense, but I trade AUD/USD and I'm adding up Euro GBP because it happened that I like this pair, and spread wise, like it, through all those brokers and prop firm, it was the right pick. Anyways, those are the two pairs, and now I'm trading those two. I'm trying to keep it simple. I'm taking 2 trades on each a day max, but I see a lot of of you guys, like, you trade more pairs, but then like how do you make the choice of like picking the pair? Because for me it's like, well, I could look at 100 pairs, but then like since I cannot really predict, and like I can just go and react, and like how can I know if one pair would be the better choice? So that's why like my system is really like made simple, because I don't want to make the choice, even if that makes sense.
Mm-hmm.
Because you know what I mean? Does that make sense? Like what
No,
I'm
it
trying
makes
to
sense.
understand.
You said your two pairs are Euro GBP, and what was the other one?
AUD/USD.
Euro USD. Okay. So, I mean, you don't really have to watch a lot of pairs. Generally, the thing that you really want to go for is being able to follow strategy, which you have a really good, strong foundation on, and being able to execute it. The more pairs just help you if you're trying to find multiple opportunities within a day. But
Right.
one thing that you can look at, the way that I always picked it, one thing I'll do is I pick a couple currency pairs. So I pick I have two favorite majors, like major pairs, and those were the ones with USD in them.
Mhm.
Then I have one exotic pair that I really like, and I have one or two minor pairs, and then I have two indices that I like. But on a given day, like what I'd recommend people is watch no more than three, because you can't balance that so much. And the good thing is if you pick, like, for instance, a major pair, like you have Euro USD, and then you pick Euro GBP as your minor pair, and you pick the NASDAQ, well, generally there's correlation. So if Euro USD is going up, more than likely NASDAQ's going up. And if Euro USD is going up, more than likely Euro GBP is going down. So you can bounce off of correlation to be able to handle it. I watch more than three pairs, but there's strong correlation in the pairs that I watch. So that more than likely, when I watch one, I'm watching multiple ones at the same time, because they essentially are going to go in a correlated direction. Does that make sense?
Yeah, of course, it makes total sense.
So
Well, I guess
that,
just because like I've been like just trading AU for like 3 months, and I'm just adding this new pair, and I'm just a bit confused, and that's why yesterday I was like fucking confused like crazy. Because like obviously I've also like improved, like gave little tweaks to like my system, I guess. And it's like, and handling already two is a lot. But yeah, I mean, then you answer my question, like, all right, like what I'm doing is right. This is okay. All right. I was just wondering, like, if I may be wrong or something in what I'm doing, but basically that's what I'm doing.
no, I
But
mean,
your GBP and AUD/USD are like normally like no correlation, although they're probably all correlated in some way. But you know what I
yeah.
mean? Your GBP, AUD, USD, BAM, you have the four. So
Well, like for instance, AU and EU, they both have USD at the end. So if Euro USD is going down, AU is going down, GU is going down,
yeah.
because they all share USD as a common pair. And if the bottom pair, the back pair is strong and the other one's weak, it's just going to drop. And so that's why I tend to find them. Like I was watching I watch a bunch of majors, but I have UJ, which is the dollar strong, the UJ goes up. The dollar strong, also EU, GU, and AU are going to go down. So it makes it easy when I look at all four pairs and I see one that doesn't meet the correlations. I'm like really double checking, like, did I look at this right? Or, and it's just the oddball situation, because no pair is 100% correlated. I mean, it doesn't move always the exact same, but a majority of the time it's probably going to. So that's just
basically in your case, you're like using correlation as like confluence or something like.
Yep. So
right.
using correlation definitely it helps, but also the flip side is, like, for instance, let's say you get a trade in EU and a buy, and you get a sell on GU. You're going to sit there, and correlation will mess you up mentally as well too.
Yeah, so that's it. That's why I didn't want that, because I used to do that in the past, but now I'm just trying to make it as simple as possible. But yeah, it makes sense, bro. All right, perfect. Whatever you do, I guess, like, you just have to get used to it and work on it.
Yeah, I mean,
you need to get used to new stuff. Yeah.
Yeah, over time over time mentally, I think you'll get adjusted to it. It takes a while, because when I first started, I was being thrown off by correlation, because you don't want to trade off a correlation. You want to trade off what you can see. But correlation is one of those things that kind of helps you there. Be like, maybe I should relook at this again.
Yeah. That makes sense. All right. Thanks, bro.
No problem. Who's up next? Who is got the next question? If y'all want to review price action, you want to view certain setups, see why you may have taken a loss on certain trade, feel free to ask, guys. We'll make this completely open and to you. Or if you want me to look at a certain market, just tell me what pair, and we can take a look at it, review, and see what we have upcoming. Oh, yes. I was asked one question by Rob. So give me uno momento, guys. And I'm going to share my chart. If somebody had a question that's not going to be able to probably make office hours. So, all right. I think somebody asked, what is the correlation between 2 hour and like 4 hour POIs and then 10 to 30 minute? So give me 1 second. Let me know if y'all can see my screen. Oh, perfect. All right. So there was a question about 4 hour and 2 to 4 hour POIs and then how they relate to your 10 to 15 minute POIs. So we'll just take a look at, for instance, at NASDAQ, right? And so first thing, just looking at market structure, right? So what do we see currently? Market structure made a higher high, higher low, higher high. It shortly pulled back, making the higher low here because then it got broken by this high over here and came up to make this higher high. And so then price came in to make a lower low. It had really no pullback. And once it finishes making a lower low, I mean, this is a lower high because this is now a new lower low. Just the final point hasn't been created yet. So let's talk and look at what we have here. So when you have your POIs, from right here, there was the higher low that was created. And so when we look at excitation order flow, right? So here's where we consider this to be a demand zone. This would be, you consider your extreme demand zone, and it ended up breaking and making a new high. Now, if you come down to a lower time frame, like 10 minute, or let me say 15 minute, really. What do we see on the 15 minute? Well, when price was out here making this higher high, we knew price was going to eventually come down lower. So the general direction that we have is price going in this little orange line, the dark orange line that's going downward. So we know generally our direction is price is going to come into this POI. So what happens is we kind of take and say, okay, for expectational order flow, we expect from a higher high price to go to make a higher low. And then if expectational order flow continues to follow, we end up making a new higher high. So when we get to price over here, for instance, this was on the 22nd of July, price ends up making pretty much a supply somewhere right here. And so we have like a supply that's on the 15. I think it's probably better shown on the 10. Let me go to the 10 minute real quick. Yeah. So price ended up breaking this low right here. Price ends up making a supply zone. Price comes and breaks this. Price comes and taps back in. Price then goes and breaks another low right here. So we have yet another zone. This one's more like a range. So what you'll notice is that on this 10-minute supply, what did price kind of do? Price comes in, goes down, comes up, goes down, comes up, goes down, and it keeps going until it goes into our 4-hour POI, right? So essentially, price ends up following the 4-hour direction that I was mentioning, this orange line, but we use the 15-minute POIs continue on in the general direction. So we're taking supplies in this general direction until we come into this 4-hour zone. Then when we get into this 4-hour zone, that's when we start to see things like, for instance, this right here. This was our first break of, this was the last supply on the 10 minute. This was broken, and now we start seeing demand come and take in. Oh, where's my supply? Oh, there we go. And so now we have a demand chain that's beginning to be created, but the demand wasn't strong enough to overtake this 4-hour POI. So supply was broken here. Demand starts, comes in here, comes up, slowly breaks above somewhere over here. And we get more demand coming in, which gives us a small reaction. So why was there a reaction of demands that are strong or slowly beginning to build up steam? Well, that's why we go back to our higher time frame. And remember, we're at the spot of a demand zone. So what we were expecting was expectational order flow to give us a higher low at this point and price possibly come up. But what ended up happening? Price ended up having a small reaction, and then it failed, and it went through and broke through it. So now what we look at is we look at wherever our supply. Well, this was your first, let's see, right here, this candle right here, this is your reaction point. So if you were considering taking the zone, this really could be treated as a 4-hour supply, right? So you could treat this area, it's a big area, but it could be considered a 4-hour supply. Now, when you come to, for instance, your 10-minute time frame, what ended up happening? Well, supply ended up taking through, and we have price that breaks here. This was the last 10-minute supply that was broken right here within inside of our 4-hour zone. But then demand goes and breaks through. So now we have a 10-minute demand. But as you'll see, the supply holds strong. And the reason why I say this, because after this demand jump, price never ended up coming back that high. It just, if you look at this is what we considered a really corrective return. And it's not showing that that the demand is really that strong. We did have a break here of this low. And we have supply that kicked in somewhere right about in this area. So I'm gonna pull this range. So supply came in right here. And then now what do we have? For the rest of the day, we have breaks of lows, which generates 10-minute supplies over and over. It does it again. Well, you can take pretty much this whole thing, because this pretty much is a range all right here. And we have yet another supply, and then we have another break. Another supply. And now, as you notice, the direction is we came to our 4-hour zone, and oh, Momo, you're the one to ask. Okay, I'm covering that actually right now. So got the perfect timing. So we see these 10-minute supplies. When we see a supply chain that's continuing to go down, there are even more zones that I'm showing right now. And so why did all these 10-minute supplies hold? It's because, remember, we came up to our 4-hour supply. So remember, we were following excitational order flow, but price ended up breaking this higher low on the 4-hour, which means that in order for this demand zone, extreme demand zone, to be broken, there had to be a 4-hour supply. Price dips a little bit below and then comes back to test this 4-hour supply, and then it rejects and price continues. So now we had a lower low. This will be a lower high, and this is going to create a new lower low. But so when you go back to your 10-minute time frame, that 4-hour zone, remember, this was the last 10-minute demand. We had a supply break here, demand breaking supply. Demand never came back. Price ended up breaking internally right here and creating a supply. And then we see our supply chain go through and break the last spot where we had demand take over, which was right here. And then we could just continue to see the sell-off over and over. So when it comes to your zones and the way you should think about your zones, the 4-hour and the 2-hour are at a higher time frame than 10 minutes to 30 minutes, anywhere in that range. The higher the zone, the stronger it usually is that it holds, and it takes more precedent than your lower time frames. But what we use those higher time frame zones is to find areas where price will end up reversing. So remember, this line, I'm gonna change this color real quick. This purple line right here represents the 4-hour trend in direction. And as you see, price went from a low to a high to a low to make a new high. We see 4-hour demand. Price ends up making 10-minute supplies on the way to that demand. It then has a reaction where it starts to have demand come in from the 10-minute perspective, and then price ends up breaking the 4-hour because it broke structure. And so then as it breaks structure, we're going to see that a new direction. We've had a reversal on the 4-hour. So we see our supplies continue to give us push down. Then we see a demand push up, very subtle demand push. And then price ends up coming down, and you'll see that your 10-minute POIs generate supply after supply after supply, in which we're trading along this 4-hour direction because we left the 4-hour zone, and the 10-minute zone, the 10-minute zones that we have along the way are supporting what we see from a 4-hour perspective. Does that make sense, Momo? Let me know in the chat, or feel free to come off mute to let me know if that explanation made sense. Awesome.
Can you hear me?
Yes, I can hear you.
Yo, what's up, Brian? How you doing?
Hey, doing good. How about yourself?
I'm great, man. Thank you for taking the time and explaining this. And hopefully, I'm on my laptop, so hopefully it's not making too much noise. I'm gonna be honest. It's like I understood what you explained,
Mhm.
but when it comes to like real everyday trading, get confused as whether I should look for like you've shown examples with 10-minute supplies, but where do like 30-minute, 20-minute, 25, 15, like all these different time frames come into play? Like I'm sure like I heard Rob say he looks for POIs from the 10 to 30 minutes zones, but I don't get how that makes sense. Like, do I trade from every single like 30-minute zone? Do I have to look for 15-minute zones? Like that's what is not clear.
I'll get
If
you.
that,
Okay, got it. So as you'll see, the 10-minute zones gave some smaller pushes, and you could trade from each one of these 10-minute zones, granted that it taps into your zone, right? So that's one way of looking at it. If you say, all right, I know we came to a 4-hour or a 2-hour zone, I'm going to find zones anywhere from 10 to 30 that support the same direction that I think that the price is going to go. So yes, you could trade off of every one of these 10-minute zones, but sometimes the picture isn't clear, for instance, on like the 10-minute or whatever time frame that you're looking at, right? So that's why you might look at a higher time frame like the 30-minute. And so like for here, what did we get? Well, we get this break right here. We had this wick break. Well, really the first break was really this zone right here. So it breaks through right here. We get, this is a 30-minute zone, which is also, we could have saw the same thing on the 10-minute. Then price comes here, and look at how this breaks with a wick. And if you were looking for a 30-minute zone, you would have been looking somewhere about right here. And it would have barely missed right here. You see that?
like if price comes back to that 30-minute supply, do I just wait for a 1-minute change of character and trade from it? Or so just 1-minute change of character is enough?
Yep. So if it comes back to a 10-minute, 15-minute, 30-minute zone, you can go down to M1 and look for it. Or you can even trade off of the 10-minute, 15-minute, 30-minute time frame as well, too.
But aren't those like the same zones? Like if you look at this exact scenario, but like on the 15, I'm sure you can kind of find some supplies as well. So isn't that like the same thing if I were to highlight supplies on this time frame?
Yeah,
and
it's pretty
wait
much
for
the same thing.
so I can just do the same thing. I can just because like I feel like looking at different time frames, that's what like it's not even like confusion on the chart, it's just confusion in my head whether like I should wait, because if it's just 1-minute change of character inside of a 15-minute zone, that makes sense. But if it's like a 30-minute zone, I'm like, do I have to wait for other stuff to happen before making my entry? And that just kind of creates confusion. So you like when you're like actually like trading and you just open a certain pair and you're going through your checklist, um, how do you choose whether you should like pick a 10-minute zone over a 30-minute zone, or vice versa? How do you like, what's the thought process of that?
I start with the highest time frame and work downward, because the higher the time frame, the stronger the zone.
Yeah.
The lower that you get, it becomes a little bit weaker. So that for me is how I go about it. But honestly, like I can understand, like looking at a lot of time frames can be very confusing. So, like for instance, I've narrowed it down to just 2 time frames that I look at for zones, because if I look through all of them, I would be confused
And
myself
what are those?
mentally.
What are those time frames?
I'm just looking at 30 and 1 hour for right now.
Oh, 1 hour.
Mhm.
So I just thought we never saw, like I would see like the 4 hour, 3 hours, and 2 hours for higher time frame directions. Like that completely makes sense to me. Uh, but like the 1 hour, so you do you like highlight 1 hour zones and just wait for 1 minute changes of character inside of those?
Yeah, because I'm not using 4 hour for my higher time frame zone anymore for the current time based on what I'm seeing in the market. I'm using the daily as my higher time frame zone. So therefore I can use the hour or 30-minute
Oh,
zones.
okay.
And
But I
then
assume,
whenever the 1 minute whenever they come into the zones, I just go on 1 minute and look for a change of character.
okay. So, but I assume you trade like different pairs, or do you like apply that in the like forex pairs as well?
I play for EU, AU, GU,
Oh,
UJ,
okay.
NASDAQ, and US 30.
Okay, so like that's kind of a little bit of a different way of trading. So like what zones would you like advise for me to look at to like make sure I get confused the less like amount possible, if that makes sense.
Yeah.
Because like I would look for 15-minute zones, and if the 15 is not exactly too clear, I look at like 14, 13, 12, 11, and 10 to until I find like my hidden supply or whatever.
Mhm.
But I just didn't know how the 20 minutes, 30 minutes came into play.
So like all of that, like I'd recommend if you're going to use a higher time frame, you use the 4 hour. You could use
Yep.
the 4 hour, for instance, for your higher time frame. And then you could use for finding your POIs, use like 10 to 15, anything from 10 to 15. So if you find like a good zone that matches up with your direction that you're looking at from the 4 hour, 10-minute to 15-minute zone is usually pretty good. And
What if
that
the zone what if the zone looks the same? Sorry for interrupting. What if the zone like on the 15 it's a supply zone and the 10 minutes is the exact same supply zone, just a little bit different? Do I choose the 15-minute one?
Yeah, I would choose the highest one. I'd use
Okay.
15. Mhm.
Okay. And like that also like creates confusion for my POI selection, because like when I'm doing my POI selection, I'm like, okay, let me see what this POI done. Did it break structure? Did it take liquidity, substructure, and et cetera, et cetera. If it's like if it's a 15-minute zone, I can completely understand when a 15-minute like supply broke structure. But how do I know where when I like a 10-minute supply or 20-minute broke structure, do I have to find like a 10-minute structure first? Or how do I kind of know that?
I wouldn't really look at structure on anywhere from 10 to 15. I wouldn't look at structure at any time frame other than the 4 hour. And the reason why is because, like, for instance, all right, let's say, for instance, you wanted to look at structure, right? Every time it breaks with one of these lines, that shows you structure, right?
Mm-hmm.
See, you see these little small orange lines?
Yeah, that's the indicator, right? The
I know,
structure indicator.
I just drew that
Okay.
mainly. So this is every time it broke a low, really.
Okay.
Now, if I went up and I looked at the 4 hour time frame, we already knew that price had made a higher low here, a higher high here, broke for a lower low. It came in and tapped into this 4 hour POI. So based on it making a lower low and coming to this 4 hour POI in this candle, what do you expect price to do?
I continue to go down.
Right. So do you really need to go look at 15-minute structure to know that?
I mean, no, but I just use 15-minute structure purely for my, like, if I have two supply zones, the one broke 15 structure and one didn't, I'm like, okay, the one that broke 15-minute structure is a little bit stronger. That's the only way I use structure on the 15-minute, because I know that the 15-minute structure is so loose and it changes so much. I just use it in that particular scenario.
You don't really have to look at structure. You can just
Okay.
figure out where the last low is and be able to figure out where a supply is, because sometimes 15-minute structure gets broken. And what I see that confuses a lot of people in the group is that when you have a direction from the 4-hour and then you see it become unconfirmed on the 15-minute, and then you're not sure which one to follow, the higher time frame always trumps whatever you see on a lower time frame. So if you're going to already have a direction from your 4-hour, all you really need to do is just find whatever supply or demand zone supports what you have from a higher time frame. You don't really need to look at structure though.
Good. That used to create like I used to be like one of those who like, yeah, but the 15 just became unconfirmed. Like I don't look at 15 structure that way anymore, but I just used to look at it for POI selection only. But if you're telling me to not do so to create less confusion, I will gladly do that, because that would make a little bit more sense when it comes to my analysis. So
that was
start
confusing for
like,
me. So that's why I mentioned that, and that helped me clear up a lot of things as well too, by not looking at 15-minute structure, just saying, all right, I want to find supply and demand that supports what I see from a 4-hour direction standpoint, and a lot of my losses went away like that.
Okay, can you go back to the 4-hour zone that you the supply that you highlighted real quick?
Yep.
I'm just like wondering, why did you choose that zone particularly? Because me personally, I would have chose that last bullish candle right there. And of course, it's not exactly too clear, so I would have just went to the 2-hour or the 3-hour to find the best kind of looking version. Why is there a reason why you chose that zone instead?
Oh, that was just the first reaction. So this was the demand, this was the reaction point, and then it broke through on the next candle. So that's a way that you can pull zones.
Oh, yeah,
That's
you're right.
Just a different way of pulling zones. So.
Okay, yeah, you're right. The same concept applies over. Yeah, okay. So I feel like okay, so I can look for 1 minute change of character would be enough for a 30-minute supply zone or 20-minute supply zone in this particular scenario, for example, where you're bearish. I could take the entry from that by itself. Okay. Well, I don't have any more questions so far. That cleared a lot of doubts, and I'm thankful. Thank you for doing so. If I have any other questions, I'll ask them, but that's it for now.
Awesome. Sounds good. Sounds good, man. I'm glad you came in at the right time.
Yeah, I actually I came from work at 9:05. I rushed to my laptop. I'm still in my working clothes. I was so I was so curious as this. I was wondering, maybe I have to highlight 30-minute zones and wait for price to get there and wait for another 15-minute change of character. But that didn't make sense in my head, because I'm like, then that wouldn't make any too much sense. So I'm missing something. But as long as it's following the higher time frame, you're just looking for the best looking zone and the one that did the most to trade from.
Yeah, that's the easiest way that I can explain it, and probably the way that it probably will make the most sense and make it easy enough for you to be able to do repetitiously, because that's the key thing. You just want to be able to follow the same thing over and over.
That's what I've been trying to do. Have my trading plan and just stick to it. Risk, manage my risk properly. And I've been seeing results. I'm not gonna sit here and lie. I've been seeing results. Sometimes I would see something from Rob either on the group or on Instagram, and I wouldn't understand what's happening. So I just wanted to have less confusion in my head as possible and just kind of trade like a robot, where I have my plan, I stick to it, whether the trade goes or not. I'm just following my plan, and I'm sure it will work at the end of the day. That's what I've been trying to do. Trying to get rid of emotions.
Good stuff, man. Good stuff.
But yeah, thank you for the help, man.
No, not a problem at all. I'm glad that I answered your question. All right.
Yo, did I miss the hooker chat?
You sure did. You missed all the
Yeah.
secrets, man. We're giving out free ways to get hookers from the charts.
I'm just home. I'm just home. Oh God, you got to fill me in. I'm gonna have to replay this video later.
We got you. We got you. All right. So we got a question regarding chalks. So would this be considered a chalk? And answer is yes. So it took this high, it swept this low. So you really have a flip zone that could be found somewhere in this region also if you wanted to look for a flip zone. This is a lower point that it broke, but you also have some like internal chalks because it swept this low, create this high. This was considered basically like a demand. And when price comes and breaks through this demand, you could also treat this as a chalk as well too. So you have one here, you have one here. So I hope that answers your question, Ignacio, regarding chalks. Let me know in the chat if it does. Okay, cool.
So I was having a question. What's for a strong POI?
Say that one more time.
What would you consider being a strong POI? And the same question I would like to ask Nathan also.
Yeah, I'll go ahead and begin real quickly. We'll just pick up to this chart that we already had open. So let me clear this up, guys, so it's a little bit more clear for y'all. All right. So what would I consider a strong POI? I would consider, well, two things really. I look at one, what I want to see and what I think about is I look for like a small range to be created before it makes a strong move upward. So what I look for is I can look kind of at this at a line chart to be able to figure out sometimes, but for the most part, I'm looking to say, okay, if price comes and breaks here, I want to see it break with strong candles. And sometimes that can look like imbalances. Sometimes it's not balances. Sometimes it's just consecutive candles. And that generally gives me what I consider a strong push. I want to see it to break what I consider a high or a low. And I want it to be generally a quick move. So if it takes a little bit long time to be able to break, those are what I don't really consider strong POIs. So here's an example of one right here. It breaks through this low. It broke with a couple of candles. It's kind of not exactly all the way strong, but it does have some semblance of imbalance if you use that as a portion. It's just not as big as it could be. But when price comes back to it, we get a sharp reaction, and eventually price ends up going down. Another example of one that I would consider would be here's another one. Price ends up sweeping this low. If you look at the candles have strong momentum. So they're strong, big-bodied candles. So I would consider this area to be a strong POI right here. And then you'll notice what ends up happening is when price comes into it, you get a strong wick reaction, and then price eventually goes down a break. It comes back up, it tests the same region, but it doesn't break. And then you see a strong movement and price continues in that way. So that's for me what I would consider to be a strong POI. Does that make sense?
Yeah.
Awesome.
And maybe Nathan could show me his.
Yeah, for sure. I'm just going to see, I'm actually on my phone. Is there a way that you can draw on this?
Yeah, go to share and go to whiteboard, and you can share on a whiteboard and draw with your finger.
Let's see, I got share, screen, photos, iCloud.
And PG, Apple is in the Dow Jones as well. I just saw your question.
Okay.
So whiteboards. Okay. New whiteboard. Open and collaborate. I guess that's it.
I think so.
Awesome. All right. So for me, it's basically down to three things because I use liquidity. So it's kind of good for someone who uses liquidity. For me, it's three rules. One is would be sweep of liquidity. So what I like to see is I like to see three things, right? A sweep of liquidity, a reaction, and then the break of structure. Whether it's substructure, minor structure, whatever type of structure, it doesn't matter. But as long as I see a sweep and a reaction, if I don't see a reaction, it's less of a high probability POI for me. If it doesn't sweep liquidity, it's also less of a high probability POI where I feel like the POI could be swept. So I'll explain that now. So basically, let's see. How do I draw on this thing? Can you guys see a white page in front of you?
Mm-hmm.
Mm-hmm.
Let's see.
You see that line I just draw?
No.
Maybe that's not it.
Can anyone draw on this white thing?
Can y'all see the boxes I'm drawing?
Yeah, I can see.
Yeah.
See some. Uh-huh.
Oh, okay. Now I saw that you drew.
I didn't draw anything.
Oh,
I'm with my
see.
I'm like messing around here with my finger. Nothing's coming up. What is this shit? Zoom on iPhone is not great.
It's not setting us up for success.
Is liquidity sweep the same as liquidity grab?
You asked if a liquidity sweep is the same as
Sweep.
liquidity grab.
Yeah, is
Sorry.
that the same? Or-
Yeah. Brian, could you actually bring up a white screen on yours and I'll annotate on yours because
Sure.
it's not working on iPhone.
Sure. Where is my? Okay, there we go. Can you see it now?
Okay. Yeah. So annotate. Okay. So this is what I look for, right? Can you guys see my drawing? You
Yeah.
can see that?
Uh-huh.
Awesome. Right. How do I? That's erased now. Okay. They make it so difficult on iPhone with Zoom. I don't know why. Right. Yeah. So the first thing is a reaction, liquidity sweep, and break of structure. So what I like to see is I like to see price come down. I like to see come up, sweep something to the left, and then break structure. Right. If I can get a reaction, and this is where I would see a reaction. So it would be a sweep, a reaction, and then a break of structure. Right. So the sweep is from here. If you understand what I'm saying, that's what I kind of look for. I know it's not a chart example, but it's important that I see that liquidity was taken.
I can't see it. Can y'all see what he's drawing right now?
Yeah, I saw. I was just wondering where would you pull the POI from actually, because you show the sweep, but the zone itself, I was wondering where it was.
Sometimes I get confused.
The zone would be here. This would be my reaction, and that would be my POI. I know it's terrible, but this is what I got because I'm on the phone. I needed to sweep liquidity to the left. I needed to react and then break. Because if liquidity for me is not swept on the left, what will happen then is I will need a buildup of liquidity before the POI or expect the POI to be swept, if you know what I mean. Because what you'll see a lot in the market is you'll get this sort of thing where you get a break of structure, right? And because maybe it didn't sweep liquidity towards the left, price will either go straight through, or if that happens where the POI hasn't swept liquidity, I like to see personally liquidity being built, then the tap into the POI before the continuation downwards. So always look for that sweep before it breaks. If it doesn't sweep, I'll still mark the POI, but I'll mark a reminder there that it didn't sweep liquidity. This POI could be used as liquidity, and usually it gets used as liquidity for the POI above it. So the three rules are a sweep of liquidity, a reaction, because the reaction shows a change of hands between buyers and sellers, and then the break of structure, which is, break of structure, right? I'm sorry it's a drawing, but that's all I got for you guys.
I mean, it's pretty clear, to be honest. I pretty much do the same actually, except I enter a bit differently, but yeah, it's the same in terms of POI selection. So it was nice to hear that. So thanks.
Yeah, look, liquidity, like you see Brian doesn't even trade liquidity, and he's very, very, very successful without it. And it's truly down to the person on how they view everyone. You know, all the concepts are the exact same. We all trade the exact same thing, but we all see it differently. You know, that sort of way. So, you know, yeah.
Sorry, I have question.
Yeah, man.
Hello.
Hello.
Yeah, I have a question. I am late because I'm working. Yes, I want to know how to get a higher high and the higher lows. Can you help me? The lower lows and the higher lows. Is that possible?
Yeah, that's what the indicator, right?
Your pardon?
Is to do with the indicator on TradingView.
The indicator? No, I don't use any indicator, and I even forgot my earpiece home, so it's like I cannot hear you loud.
Right.
Are you needing help drawing it on the chart, or are you needing help with?
Say that again, please.
You're needing help drawing it on the chart?
Drawing it on the chart. Kind of, yes. I need a little help with the high. Sometimes it's a little confusing. Sometimes I am seeing it. I'm saying, okay, I'm wondering if that is higher high or, you know. So I need a little help with that. But I came to the meeting late.
No worries. I can share with that real quickly. So here's how you should think of it.
Just now, can you, is it possible you can speak a little louder because I forgot my earpiece home and I'm on the job?
Yes, I'll try to talk as loud as I can.
Thank you so much.
Is this good enough? Can you hear me?
Yes, it's good enough.
Okay. So price makes a high point. Do you see where my cursor is at?
Yes, I see it.
When price breaks a high point, when you measure it from the last high point to the new high point, if it's higher, then that's how we get higher high.
Yes, I know that one, but I am seeing sometimes it is a little short, so I don't know exactly what to do. It just confuses me sometimes.
Say that one more time.
I'm saying sometimes it confuses me. Okay, you see you put the line up there, the red short line, right?
Yes.
Okay, the one above it. Look at the higher, that's the higher high, right?
That's correct.
Okay, so where would I put the end to make it is it a higher low?
You look at between the last point that was high and the new point is high, you find the lowest point, and that's what ends up making your higher low. And then when it breaks and makes a new higher high, you do the same thing over and over. So you say, okay, between that high and the last high, what was the lowest point, which will end up being this point, and that's how it makes a lower low. Now, when price goes from a higher high and it makes a lower low, you don't have to worry about a point in between, because you're going from the last.
Say that one again.
When you go from a higher high to a lower low, you don't have to worry about any points in between. But then once you have a low that's broken, you figure out where your next lowest point is. So right here, this would be when the candle pulls back, this will be a lower low. And in between a lower low and the last lower low, you find the highest point, and that's how you get your lower high.
No, I get a little confused on that. I get a little confused. So let me ask you something concerning the higher low. So okay, say if the last highest point, right? Doesn't pass the other point, that means you can't make a higher low with it. No, You leave it out, right?
Correct. If this higher high is not passed, you can't make a higher low.
Okay.
To
Okay.
make a higher low, a higher high has to be broken. So you have to go
I-
from one higher high to a new higher high.
I
To make-
understand.
To make a lower high, you have to go from one lower low to a new lower low, and that's the only time a lower high is created.
So let me ask you something again. Okay, you see where it breaks break structure, right?
Mm-hmm.
Right, the first one. Okay, you were saying something about you don't have to. I am a little confused. You could repeat that from right around there. Where does it make a lower low? After, right? After it breaks structure, right?
Correct. You went from this higher high point, it broke the structure, and it made a lower low point. In between a higher high and a lower low, there's nothing in between. There's no kind of points in between.
Okay, so where would I mark up my where would I mark up my lower? Is it lower low? My first lower low, right? Where would I mark it up after it breaks structure?
Once it pulls back by a candle.
Once it pulled back by
This point right here is the lowest point. The next candle that closes is higher than this point right here, which means this is now your new lower low. The reason why there's not a lower low right now, right here, is because this candle closed and this candle is already lower than the previous candle. So what I need is a candle to close like this. If this candle was to close right here, and then I get this candle that closes, I can't get it. That is so weird. I can't move where I want it to be. Once this candle closes, let me do it like this.
Above it.
Yeah. Like this, something like this. That's an ugly looking candle. Once it closes like this, then this point right here would be a lower low.
Which point will be the lower low?
The lowest point of these candles. The lowest point.
Okay. I understand that.
Does it make sense now?
Yeah, I understand.
Awesome.
Janice, there's an indicator too that can help you at the start if you'd like to get it.
Is it wise to use indicator?
Well, it's just the indicator to show you the higher highs and higher lows, you know.
So don't you think I will get addicted to the indicator later on?
It'll help you maybe, learn at the start, just to get things in place, get you on the right side of the market. But you don't have to rely on it. You shouldn't rely on it.
Okay, so what do I have to do? I saw you have some indicator in the course, but I went to market structure, so I didn't do the indicator as yet. So I don't know.
Go into the indicator part of Discord, and it'll show you step-by-step instructions on how to get access to the indicator.
To this higher high and higher low indicator?
Correct.
Okay, so I will check it out.
Awesome.
Hello.
I also have a question
Thank you
in
so
regards
much.
to this.
Yes. Mm-hmm.
So on a 4 hour and 1 hour, on 15 minute and 4 hour, how much pullback do you consider to as a pullback on NAS?
I don't do pullbacks. So I use what's called 5 candle swing. And if you go inside of what's it called? Inside of Teachables, I have a video that will show you how to use candle swings to determine structure points. But there are some test values if you go to the indicators part in Discord that Rob created to what he generally thinks are some good pullback values, but ultimately it's something you should do your own testing on.
Okay.
And I think you had another question also too about correlations. And I got the website pulled up.
Yeah, I found a page, but I haven't researched so much about correlation yet.
I mean, just
maybe
generally
can you
looking
take
at the.
can you take a look at it and say what do you think?
Yeah, I'm looking. I just gonna pull it up for everybody to see, so everybody can see it real quick. So it's just a page. This page helps you to tell is know what forex pairs to correlate to each other. So of course, Euro USD is correlated to Euro USD, but Euro USD has like a 95% correlation with GBP USD. It has a 91% correlation with New Zealand US dollar, an 87% correlation with the Australian, the Aussie dollar. So it's pretty much it's pretty much correct. I mean, but
yeah, that's on the daily, but and then you have the other min. How do you like connect it to each other, or like so like if you click on hourly, it will show something complete. Or if you go a little bit down about
there it is. Okay.
Yeah, like now everything changes. Like, how do you connect the dots? You think?
Yeah. I don't even look at these. They have so many different websites that'll show you these type of correlations. But generally you can look at the time frames, you can see it yourself when you compare, if you compare multiple of them at the same time. But I mean, at different, no pair is 100% correlated to another pair, but there are strong correlations. And that's all that this is trying to show you, is when it's more likely correlated to another movement on another pair. So like, for instance, on the daily, it was 95% correlation, but on the 4 hours, 55%, the hourly is 42%, the 15 minutes, 39%. And you can use the information how you need it. But generally what I found is like, if I have multiple pairs up, I can pretty much see what's correlated, because you can tell from market structure and supply demand zones which ones are going in the same direction, and that can just kind of help you with your decision making. So I mean, you can use this. I wouldn't make this the Bible though, because like these values are going to constantly change. Does that make sense?
Yeah.
So
I have a question. You said if the candle, can you show me the thing again, please? Can you show me the chart again where he was doing the stuff, please?
give me 1 second. Let me find it, guys. Oh, here it is.
Oh, this is Brian.
Okay. You mean this chart?
The lower high, the last lower high, and the lower low, right? You said if there is not a candle that breaks after it breaks the structure and it goes down, the lower high, if it doesn't, the last candle, right? If it doesn't have another candle that goes above it, then it cannot be a lower low. That's it, right?
Right. If for instance, this candle ends up closing right here and ends up doing something like this. If the lower points are getting progressively lower, then this can't be the lower low. The lower low is going to happen once the candle pulls back.
Okay.
Because it's about the lowest point. The highest point here to the lowest point here to the highest point here to the lowest point here to the highest point. So you have to find where is the highest or the lowest point. Does that make sense?
Yeah, so I have to mark up everything, because I was watching one of the course and it was saying like about it have a certain like he was measuring it with the ruler to see if it is I think a higher height or lower height, right?
What you were seeing was measuring the pullbacks and the amount of pips that it took for the pullback.
Oh, okay, thanks.
No problem. And we got one last question from Mark.
Hello. Good day.
Hey, Mark. Good day to you too.
I have a question, please. Is it possible to share my screen?
Yeah. Go ahead and share your screen.
Okay. Thank you. Okay, it's regarding what happened yesterday on GBP USD.
Okay.
I was actually, because yesterday I was looking for buys. I was looking for buys yesterday because of the impulsive move, this impulsive move. Yeah.
Mhm.
So I was looking for buys because my bias was to buy. So on 15 minutes, when I went down my 15 minutes, okay, very low. On my 15 minutes, I took my feet from this low to this high. So I was looking to buy from somewhere here, maybe this zone. This zone. So and this zone. We're looking to buy here. So so well, when the market got here, it's reacted a little and dropped. Then I have a friend that actually caught the sales. So I was wondering how he did it, because he caught the sales from this zone. So my question now is, if the FX demand fails and maybe I was looking to buy here and I find out this demand has failed. So should I now say that supply is in control and I am likely to start selling from here? Or do I have to wait for the market to kind of react, maybe break structure below as it just did here? Or do I have to just join the trend immediately, regardless of my H4 bias?
Go back to 15 real quickly, Mark.
Sure. Okay.
Go.
Can I let me just do a little replay back. We just play back a bit. Yeah. Okay. Here, I think. Fine.
Okay.
Okay. Yeah. Okay. When the market was like this, I was looking to buy from this zone. Okay. Unfortunately, this zone got broken. Okay. Fine. Now my question is, since the market has broken this zone and on H4 my bias is still to buy, do I have to join the trend immediately, or I should wait for the H4 trend to, like, maybe I should wait for the market to break this low before I should start looking for self, or I should just join the trend as soon as this low got broken and this becomes supply? Okay, according to Rob, I think this is the reaction point, and something in here broke this demand. So my question now is, okay, okay, fine. This is my question now. My H4 is to buy. My H4 bias was still to buy when this market was in this position. And when this demand got broken, and though this was the zone that broke this demand. So my question now is, should I join the course, join the trend immediately, or am I supposed to wait till this low gets taken? Or as soon as this zone got broken, I should just start looking to short?
Yeah. Can you draw a blue box right here?
Okay. Okay. Normally I look for
well, can you do this? Can you draw a blue box right here on these set of candles?
Blue box. Okay.
Just draw a blue box.
Body. Okay. No problem.
Did you draw the blue box? I don't see it on my screen.
I'm coming to this.
Oh, okay.
I'm trying to arrange this. Okay. remove. This could be a low. On this, but there was nobody close. There was nobody candle close above this.
Yeah, but can you draw a blue box in this whole little area? That whole area? I want you to draw a box, not a line.
This, I mean, you mean this whole area? This zone?
No, I just want you to draw a box around those candles. Don't worry about the zone. I'm not worried. I'm not asking for a zone.
So which of the zones are you talking about, please?
Right here. I want you to draw a box right there.
Okay, pullbacks, right?
Just draw a blue box.
Honestly, I can't really draw a pullback here because I normally
No, a blue box, not a pullback. A blue box, like a rectangle.
Okay,
like
okay, a blue box.
Mm-hmm.
Okay, I thought you said pullbacks. Something here, right?
Yeah, just those candles. Yeah, and just make
These
it
ones?
blue. Right there, that's perfect. Just make it blue.
Okay. Blue.
Okay. Yeah, perfect. Okay. Now go to the 4-hour time frame. I don't see that box. Is that it right there?
No, it's not here. Wait, let me check it out.
Yeah.
Let me check.
Make it a little bit bigger. That may be it.
Okay. Sorry, I'm having a little bit network issues.
No worries.
Slow in loading. Okay. Should I extend it or it's okay here?
Yeah, perfect. That's fine. And now let's go back to the 4-hour.
Okay.
Okay, perfect. Now we can see it. All right, now zoom out real quick. Keep on zooming out.
Okay. Let me delete this.
All right, perfect. Perfect. Keep on zooming out. All right, awesome. All right, cool. So first and foremost, let's look at the 4-hour market structure and what it did. And let's talk about that before even looking at M15, okay?
Okay.
Price went from, made a lower high. I can't see what's right here. Do you mind moving the, yeah, perfect. Price ended up making, all right, perfect. Price ended up making a lower high to this lower low. It made a higher high. Somewhere in here, it reacted in something. There's some type of demand in this little region here. It comes down, it makes a higher low point, and it makes a higher high. So now that we know that it went from one higher high to another higher high, what are we expecting?
The pullback.
Right. So somewhere in here, I'm just drawing arbitrary spaces. There's demand that's here, right?
Yeah.
So what direction do we expect 4-hour to go?
We expect for our to come for a pullback, then make another move.
Exactly. So 4-hour is going to maybe do something like this, or hopefully do something like this, right?
Yes, yes.
So with that being the case, now let's go down to the 15-minute.
Okay.
This is the reason, everyone, why we say don't look at market structure on the 15-minute, because market structure on the 15-minute would say that this is the last higher low and that you can't look for sales until it passes that line, just like Mark pointed out. But this is a valid demand that he drew right here. And this demand was broken by supply, which he drew a valid supply zone right here. And we already know that this point right here was the wick from the 4 hour. And we said what direction was the 4 hour going?
The fall was bullish, but we needed to pull back because it broke a structure. But it made a new high, so it needed to pull back before making another impulsive move or possible break the low.
So this is one of those times when 15-minute structure is confirmed bullish, and the 4 hour is also confirmed bullish, but the 4 hour needs to complete a pullback, which goes against what M15 structure is. And if you're just looking at supply and demand zones, you could have taken that supply, play the candles a little bit, Mark.
Okay.
Okay, oh, that happened really fast. No worries. You could have taken this supply right here. Hold on a second. Let me clean the chart. You can pause it now, Mark. You could have taken.
Okay. Oh. Let me play back. Where is here?
You don't have to play it back. You don't have to play it back. That's fine.
Okay.
You could have taken this supply.
Okay.
And then when it broke this low as well too. Price came back to test this supply here too. So you could have taken a trade here. You could have taken a trade here. You could have taken a trade here today.
Okay.
Does that make sense?
Yeah, it makes sense a lot. So okay, so as soon as I find out that the demand has failed and my expectational bias on H4 is to make a pullback. So once the demand fails and I find out that supply is in control, I can change my bias to selling, right?
Exactly.
Okay, and there's this thing I normally do. I think I've sent you I asked this question in the group sometime and you responded as well. Let me show you something. Like there was a time I asked you a question, like because of this market structure of a thing, I asked if I have to start buying above, like when this market was in this range. Normally, I always look at buying below the 50% somewhere here. Normally, before I always look at this is a valid demand zone and here because it's below 50%. So, but I used to see you guys chart. Sometimes you buy here, sometimes you even find set to buy weeks here. You still try to get in. So my question now is, I should keep like this is the demand, and it's within 50% zone. When this market made this impossible, okay, let me play back just a little bit. Okay, when this market was here.
So
when this market was here, this is the last supply that made this high. The last demand that made this high. Normally, before I normally look at demands as below 50%. So, but I used to see you guys sell a buy from here, even if there is another demand here. I used to see you guys buy from there too. So now my question is, does it mean anything, or it doesn't matter if you're buying from that, but just that the below any demand below 50% is high probability, but you can still buy from here, right?
I wouldn't use it on M15. I would use that on the 4 hour.
Okay.
It's not for me personally. It's not applicable for this is not applicable for me on 15-minute. But the concept really is that if a price goes you really want to map one structure point to another, like you did perfectly. So you would go from your higher low to your higher high, and then you would say the highest probability in an uptrend is that price is going to come below the 50% and then probably go from there and then take out the weak high.
Yes.
Sometimes it will go up to 0. It might reject from here and go out above 50%. Or sometimes it might come all the way all the way down here and bounce off. But what it's saying is that a majority of the time, if you're looking for buys, it's going to be in this area, but it's not like 100% though.
Yes, yes.
Does that make sense? And I wouldn't use it on the 15-minute. I'd only use it on the 4-hour, because right now we know GBP USD is making a 4-hour pullback. So I really don't care where the supply zone is on 15-minute. I just want to continue taking everywhere where I see supply until on the 4-hour comes into its demand zone, and that's where I stop. And then I'll wait to see what happens.
Okay. And okay, sorry, the last question, please. When the market gets to this zone now, do I have to use a 1-minute chalk, or I have to wait for a supply to fall, maybe at the higher time for maybe 10 minutes thereabout before I can look for buys? Maybe
No.
as this market is here now.
No, whenever price comes into a 15-minute POI, you can use M1 chalks to get in for an entry. You can also take a trade right off of the M15 chart. You don't have to go to an M1 if you don't like. The benefit of going to M1 is you get a tighter stop loss, which will increase the amount of reward that you get for your risk. But either is okay.
Okay, you mean I can actually do something like this? I can actually do something like this.
Yeah, if you wanted to. But just know that you made your stop loss bigger, which means that your reward is more likely going to be smaller for the same target. Whereas if you go into a 1 minute, you're going to make your stop loss, like move your stop to right here.
Yeah.
Move the stop loss real quick to right there. You don't have to replay, but see how your risk or reward just doubled for the same trade. So the benefit of going to M1 is that you get a tighter stop when you look for that M1 chalk, and then that allows you to be able to get in for tighter trades and get more reward.
Okay, great. So please, is it possible for you to show your share screen and kind of show me how you would be selling till you get to the 15 H4 demand? Maybe if you're on this trade now, and if you would like selling, how you'll be selling, maybe when you get on H4 and you would see that the market might not sell again.
Go to H4 real quick.
Okay.
Draw your zone. Draw a zone right here on the 4-hour.
Sorry.
Draw a zone. Oh, don't move the chart. Draw the zone. Draw a zone right here.
Okay.
All right. Go to 15-minute. Until price makes it here, I would try to trade every supply that I could find until price comes into here.
Okay, great. So
Does that make
let me
sense?
check the prices. Yeah, it makes sense a lot. Option somewhere. Okay. I got it now. Kind of most times I get confused. I always wait for a price to break the low before I can take my fib again from the high to the lowest low before I can start buying, kind of selling. So now I got okay, the mistake I made, I would have joined let's say when price broke this low, this was the supply that broke this low. The market retraced custody, then dropped. So this, right, the supply. Okay, I would have tried selling from this zone, right? I would have waited for price or the price so I can enter from here, right? Okay. So when price broke this low as well, this was the high. So I would have waited for price. Had it been price closer to this, I would have tried to sell it, right?
You would not, the price wouldn't have come back to it, so that's okay.
Okay. But had it been price returned this one, I would have tried selling, right? Okay, that's just what I've been confused. And again, sorry. So when the price got to this hit for demand, I had to wait for a 15-minute chalk, or I can use 1 minute or lower time frames.
I mean, that's up to you, but it's high probability if you wait for a 15-minute chalk. So when price, this was the last supply right here.
Yeah.
And when this was broken, you could have pulled a demand zone right here, and you could have bought right here.
Okay. That's great. Thanks so much, Brian. I appreciate so much. I really appreciate. Thanks so much.
No problem, guys. We were doing some overtime today. Y'all had some good questions. I appreciate everybody for chiming in, asking questions, and I hope that everybody got a lot of value out of it. And don't be sad, even though we're about to end the Zoom call. We'll have another call on Thursday. We'll have the Power Hour with Rob. And then I highly, highly, highly recommend that everybody sign up at least one time for you to do back testing on Sundays. It really will help you get to becoming a better and more profitable trader. From our student success leads that we've had, once they did back testing sessions, we immensely saw their trading grow. So it'll help you answer a lot of the questions that you have, because the best way to learn trading is not by reading or watching videos, it's through experience. So the only way you're going to get experiences is having a safe space and a place that you can be able to try and be able to make mistakes and know that it's okay to make mistakes, because we're there to cheer you on. We're here to give you advice and feedback. We're here to help correct you so that you don't continue to make the same mistakes. So definitely, if you haven't already, let Nathan, Rob, or myself know that you'd like to sign up for back testing. We'll be glad to help you. Now, we were on for about 1 hour and 20 minutes, and I'm sure there are some questions that we didn't get a chance to ask. We try to answer everybody's that we can. If you didn't get a chance to get your question asked, or you think of a new one after you get off this phone call, you can be able to go to the questions part of Discord, ask a question in there. We'll be glad to answer in our available time, as well as you can save it for either next week's office hours, or you can save it for this upcoming Thursday's Power Hour call. And then also, don't forget, you can sign up for one-on-one coaching with any of the coaches. So that will give you an hour of time that you can be able to spend one-on-one. We can answer questions for you. We can work on anything that you want to. And I tell you, they really, really, really help. So don't forget, you can sign up for one-on-one coaching. And guys, I wish you the best in your trading weeks. Look forward to seeing y'all on Discord. Thank y'all so much.
Thanks, guys.
Thanks so much. Please, can I have the record of this video?